Welcome back to Thoughts on Investing. This past week was, well, absolutely wild. A single conflict managed to send massive shockwaves through the entire global economy. We saw scary headlines, oil prices going completely haywire, and governments scrambling to figure out what to do. So in this explainer, we're going to dive in and break down exactly how geopolitics, oil, and the markets all collided in one of the most volatile weeks we've seen in a long, long time.
All right, before we jump into the thick of it, just the usual quick reminder. This is all for informational and educational purposes, okay? It is not financial advice. With that out of the way, let's get to the real story.
So, have you ever wondered what happens when you take these huge forces, war, oil, and politics, and you just throw them all into a blender for 7 days? Well, this week we got our answer. It was a genuine perfect storm that created some unbelievable volatility, and we are going to unpack every single layer of it.
So where did it all begin? Well, it all kicked off with the first and most immediate impact, a massive shock to the price of oil. This was the one catalyst that really set everything else in motion. As the conflict got more intense, oil prices didn't just rise, they absolutely exploded. We saw them surge past that big psychological barrier of $100 a barrel, and you gotta understand this wasn't just some minor blip on the radar. Nope. These were the highest prices we have seen since way back in 2022, and it sent a very clear signal of panic through the energy markets.
So why does this matter so much to you and me? Because you can think of high oil prices as basically being a tax on the entire global economy. I mean, think about it. Everything from the gas in your car, to the trucks that deliver your food, to the factories that make, well, everything, it all gets more expensive. And that immediately sparks fears of inflation, which is exactly what had investors so spooked this week.
And this wasn't just some vague feeling of panic. No, it was driven by very specific, very real threats to the global supply chain. We were seeing reports of attacks on oil tankers, and that's when all eyes turned to one tiny but critical choke point on the map, the Strait of Hormuz. A staggering 20%, 1/5 of the entire world's oil supply has to pass through this one narrow waterway. Any disruption there, and you get instant shockwaves across the whole planet.
Now, what's so interesting is that an oil shock like this doesn't hit everyone the same way. In fact, it pretty much split the market right down the middle, creating a very clear set of winners and losers. And this really tells the whole story. It's like a tale of two markets. On one side, you had the losers. I'm talking about sectors that absolutely need cheap energy to survive, like airlines and manufacturing. Their costs went through the roof, their profits got squeezed, and yeah, their stocks took a beating. But on the other side, you had the energy companies themselves. For them, higher prices meant one thing: booming profits. And their stocks didn't just rise, they surged to record highs. And if you want to put that boom into perspective, just get a load of this number. In just 2 weeks, the world's biggest oil companies, your ExxonMobils, your Chevrons, they added more than $130 billion in market value. That is a massive, massive transfer of wealth driven entirely by this conflict.
Of course, the ripple effect spread way beyond just the energy sector. We saw a classic flight to safety. Investors got nervous, so they did what they always do. They started selling off their riskier stuff, like those high-growth tech stocks. And where did all that money go? Well, it ran for cover in the perceived safety of the US dollar. That caused the dollar to get stronger and, in turn, created a ton of volatility in other places, like gold and commodities. Now, just when you thought you kind of had a handle on which way things were moving, bam! A massive curveball gets thrown into the mix. And this one was all about politics. It's pretty wild to think that the words of just one person, President Donald Trump, were powerful enough to sway the entire market.
Right in the middle of the week, President Trump made a pretty simple comment, just suggesting that the war could be over soon. And just like that, with those few words, the entire market sentiment just flipped. Traders jumped on it as a sign of de-escalation, a little glimmer of hope that sent investors rushing right back into stocks.
This timeline right here shows the incredible market whiplash that happened next. First, you get this big rally, all based on hope. But then, after even more comments came out hinting that tensions were cooling, oil prices didn't just dip. They crashed. We're talking a drop of more than 11%. It was just incredible to watch, and it really shows you how on edge traders were, hanging on every single word.
Okay, so with the market swinging around this wildly, the big global institutions decided, all right, enough is enough. It's time for us to step in. This next phase was all about the official response, designed to bring some much-needed stability back to these panicked energy markets.
And they did not mess around. The intervention was massive. We are talking about a globally coordinated release of over 400 million barrels of oil, straight from emergency stockpiles. Basically, a flood of new supply designed to just calm the chaos.
So here's how they pulled it off. There's an organization called the International Energy Agency, the IEA, and they coordinated the whole thing. They got all their member nations to agree to tap into their strategic reserves. This is oil that's saved for exactly these kinds of crises. The goal was super simple: flood the market with extra oil to prove there was no shortage and hopefully stop the panic in its tracks.
Okay, so after a week of shocks, whiplash, and massive interventions, what's the big takeaway from all this? Let's try to connect all the dots and really look at the big picture here.
Let's just follow the dominoes one more time. It all started with a geopolitical conflict. That sent oil prices soaring. That, in turn, sparked inflation fears, which made global stocks fall, but with the huge exception of energy stocks, which became the market's biggest winners. Then, a few political statements threw everything into chaos, until finally, governments had to step in with a huge intervention just to restore some sense of order.
So the crucial point, the real bottom line, is this. This week proved, beyond any doubt, that financial markets are incredibly sensitive to geopolitical news right now. They're on a hair trigger. And while those emergency oil reserves might have calmed things down for now, the underlying tensions, they're still there. And that means this kind of volatility is very, very likely to continue. The big question now is, what's going to be the next trigger?
And that wraps up our breakdown of a truly wild week. Hey, if you enjoyed this explainer and found it helpful, do me a favor and please hit that like button. And be sure to subscribe to the channel for more deep dives into the stories that are moving the markets. Thanks for watching, and I'll see you in the next one.